Traders, and welcome to Price Action GPS. I'm the Market Surfer, here with your morning report for Monday, September 25th, 2023. We'll go over some charts today, but I actually want to connect some dots and put some things together. I've done a lot of videos over the past probably 2 years, and I don't expect everybody to remember everything. I just want to go over how I view the market and why I believe the things I believe. And I always, of course, rely on technical trading to enter trades, to get into trades. But the connecting of the dots is just, when you get old enough, you've been watching things for so long, you just see patterns and it's just the same game, different players. So let's go back to the 2008 financial crash. They created TARP, right? Troubled Asset Relief Program. So it was only like $400 and some billion. Well, it turned out it was $29 trillion. So this is from Matt Taibbi, believe it or not, March 18th, 2019. I'm not going to read over it. I'm just going to put it in the show notes. Just want to point out a few things. TARP, which was called the bailout, if you're a Wall Street exec, actually ultimate expenditure of TARP lower than $431 billion, but it wasn't much. Wait a minute, here we go, and it keeps going on. $1 trillion bailout. So I just skimmed through it, but in the end, it basically tells you that they're on the hook for $29 trillion. But because it was Matt Taibbi, and he is more relevant now than he was then, so I wanted to talk about that. Well, I'll put this one in the show notes. This one, bank bailout math, it was actually $29 trillion. How big was the too big to fail bailout of U.S. banks? And that's the other thing. It wasn't the U.S. banks. Most of this money went overseas. So this is why I'm trying to connect the dots in a slow, cynical fashion. So here's the TARP, what it was, Troubled Asset Relief Program. The Ford Foundation grant, as much bailouts cost, you have slightly different answer. $29 trillion, almost $30 trillion actually, if it's your policy to round that up from $600 billion. So I will put both of these in the show notes. So I just want to show you that this is true. The $29 trillion is actually true. And in my opinion, this is what had happened. Once they bailed everybody out, the money went all to the banks, mostly foreign banks, because everyone was short on dollars as well. Same thing happened in 2018. And that stutter, of course, Corona happened. And then bailouts were easy. So how big is the derivative market? And this is from 2022. This is over a year old, probably a year and a half old. Derivatives market. I'm not going to read it word for word. But derivatives market is said to be over $1 quadrillion in notional value on the high end. It's like 4 quadrillion from what I've heard recently, which is why I started looking this up again, so I could do this video about connecting the dots. The underlying assets, see, notional value, underlying assets, things get complicated and muddy. The bottom line is derivatives are going back to the movie The Big Short, right? It's a bet on a bet. Someone else is betting on that bet. And derivatives, because this is what's going to crush the market. The high interest rates, the banks are already underwater. They're basically, I would say, almost every bank in America or United States is probably bankrupt. They're upside down in their asset to liability columns. I believe they have way more liabilities than they have assets to back those liabilities. Therefore, they are bankrupt. So this is where the derivatives bomb, and this is from 2017. This is once this whether it's the cycle of the futures market, whatever the actual shot heard around the world is. But it's not even like Jenga. It's like the movie Ice Break, where you had the little ice things, I guess if you're old enough, and you knocked the little ice cubes out, and it looked like it was okay, and everything would just fall. I would imagine that's what's going to happen. So derivatives bomb could explode. This is from 2017. This is what was going on pre cerveza sickness, as some people quite eloquently put it. See, then we had QE. They stopped the QE, which is, they started tightening, so they stopped buying the bonds, and the market took over in the bonds, and here we are with inverted yield curves. So, derivatives market, and this is why I wanted to go through that. Cryptocurrency, and this is old too. This is, what year is this from? It's from 2020. This is from 2020. So all of this is quite larger than it was in 2020. Significantly, I would imagine. So, silver, that's it. Bitcoin, other derivatives. Military spending. U.S. budget deficit for year 2020. Coins and banknotes. Fed's balance sheet. Added since September 1st, 2008. Just that. January. And this is January 2020. I don't even know if all of the trillions of dollars are in that yet. So here's how many billionaires. This is what they own. This is gold, jewelry, below ground reserves. And that's, I don't know how good that information would be. Fortune 500 market capitalization as of 2020. Here's the largest companies. Stock market, New York Stock Exchange, NASDAQ, all other. Here's the money supply. M1, narrow money. M2, broad money. M1 money includes coins, currency, circulation. Here is basically it. Coins. Here's the difference between M1 and M2. And M3 is the combined of both of them. So just for that reference, you can see this. I don't have to read over it. That is the beauty of having videos. So I'll go back to all the derivatives. The money supply, so now it's M1, M2. Now you know the difference. That's why I pulled that up. Global debt. Households, governments, non-financial corporations, financial sector. This is huge. Global real estate. Now we're starting to get to something, because Evergrande in China and America, when this starts going down, I'm just saying, look at how large this market is. So that's the residential. Here's commercial, agriculture. Commercial isn't as big. So this is going to hurt soon. I don't know. The global real estate, just if the dollar gets that strong, then assets, inflationary assets will devalue, because the dollar is going to get stronger. That may not be good for the real estate market. So if we have a deflationary crash, which we will, because if we have credit bubbles blowing up, the dollar weakness is when money is cheap and easy, and there's a lot of it running around, the dollar loses its value. When we are on the other end of that now, so the dollar is gaining value, the more loans and, well, I wouldn't even say asset-backed. I would just say derivatives and loans that aren't necessarily backed by wealth will crumble and fail. It makes the dollar stronger. So, and here's global wealth, North America, Europe, Asia. This is actually pretty interesting. Africa is pretty low on this, and obviously that will grow with the assets they have. And here's the derivative market. Here's derivatives. So, this is what we'll do. This is no different than 2008. This is exactly, we're just more leverage now with more parties involved. And I believe that that this 29 trillion was flooded in the market And by 2011, it started gaining strength in all derivatives market. So there was turned into derivatives over and over again until now. So I don't think there's another bailout coming. I think this will actually unwind, unravel, and this will usher the actual reset. Call it what you want. It's not a political thing. It is the end of a monetary system. And I know everyone has their political ideology, but actually no one knows really what the right thing to do is. So with that, I will go back to the charts. And here's the ZB, which we hit our 116 mark. Should be bouncing off of that, but it looks like the April 2010 low is probably the bottom. We may have knocked off some steam from that falling knife, but I think we bounce. We probably do get down to this 114. That's the daily. Look at the 4 hour. So if we're staying under this watermark right here at 117, then 114 is still in play. If we break above that hang, then we come up here. Not saying we can't get down to 114, but once we get over this support, I would look at it as at least we're riding up to there. So in case it continues to go, at least you're in the trade. Not telling, it's not financial advice. This is just how I look at the chart. So that and Bitcoin are probably the ones that everyone here is more concerned about. Bitcoin, if it holds that right there, that's pretty good. But when is the dollar going to gain its value? When a dollar gains its strength, it will hurt Bitcoin and every other dollar-denominated asset. So what other chart are we going to look through? So here's the US 10-year. That's gaining its nice little wave 5 momentum still to the upside. I mean, this is a failure at some point, but the momentum still to the upside on at least the daily. Here's a T-bond futures, the 4 hour. Looks like we're probably just heading down to here. Here's the 30-year, and this is on a monthly chart. So on a monthly chart, 4.8%. Looks like where the momentum's taking us. Let's see what we look like on a daily. And there's nothing here that says otherwise. So that's probably more likely to happen than it rolling over and getting under the moving averages before we hit that. Dollar Japan, 20-year. Amazon, Palantir. I really wouldn't be investing in anything. I'm more interested in the interest rates, the T-bond market, PayPal. Look at that. I'm also interested because, going back to Citibank and tokenization, I think that's going to be the term for 2024 will be tokenization. So, all right, everyone. With that being said, this is a value for value endeavor. And I would most importantly like to thank Sir Alex for having a wonderful no agenda tube that I can put my videos up and never have to worry about anyone taking them down. Obviously, I put them on YouTube too because this is for friends and family who are interested, and I love doing this, and I'm doing it every day anyway. So today I'm a little under the weather and a little later for me to do my video. So once again, everyone, thank you. You can always donate in a Boostergram if you have a modern podcast. You go to podcastapps.com and download. So Podverse and CurioCaster always do a phenomenal job of the videos. If anyone else is doing a good job with video, let me know. I will plug them as well. But I actually have a membership to Podverse. I like Podverse. Once again, thank you for your time. Give us a thumbs up, a liking, subscribe to us. Give us some feedback. Most importantly, have a wonderful day and stay safe and effective.